Hi everyone, thank you for taking time out to join us today. My name is Paul. So just come up with your questions. I think this is meant more as a Q&A. We've been handling a lot of questions about refinancing, especially now in January. You're receiving your bank statements. Now I'm sorry if it's a bit noisy. What's happened is that my aircon just died on me, and so I'm running off fans. Literally just in a few minutes ago. But if it's too noisy, do please put it in the chat group. Let me know, and then my colleagues will let me know. Yeah. So let's start. Maybe just let me introduce myself. So my name is Paul. I've actually been in banking a long time. I was head of sales for a couple of banks before I left to do my own stuff, and now I'm in Property Guru, running Property Guru Finance within the FinTech group. So the whole idea, like I said, behind today's questions is hopefully I can answer some of the burning questions. We get a lot of these questions on Property Guru website through our Ask Guru series. So I'm answering actually quite a few of these questions, but please from the very beginning ask questions. Yeah, if you think of something, just put it on, and then at the end, Jaslyn, wow, very fast. Good question. In fact, I'm going to cover that later. Uh, let's see. Any others? So just shoot questions. The more the merrier. If we can't answer all the questions during this 1 hour, what we'll do is we will probably do content pieces if we haven't covered it, or we will reach out to you, or you can put your name out so that somebody from my team can have a chat with you, okay, and answer these questions for you. I think it's really important that we do that. Okay, so let's talk about the agenda. Now it's 11:04. At 11:05, we are going to be running through some of the content. 11:30, I'll go through the Q&A. Now that timing is a bit elastic. Actually, the content part, I deliberately put it a lot shorter, because really, if I want to cover a lot of content, A, it could be too heavy for you. B, if you're interested to know, okay, just put it in, and then we'll have a conversation. Now, this refinancing is a lot of people think it's just about interest rates, but it's not. It's a lot of questions like what Jaslyn talks about. Should I refinance if I'm planning to sell, or do I have what are the steps I should do in terms of research and all those things? So the thing is, it gets a bit complicated, and we try to answer as many of these questions. Why? Because if it's just as simple as looking at interest rates and the packages, then everyone should be doing it easily. But we've seen a lot of cases where people get stuck. So it's 11:05. So let me start. Okay. Okay. So the first and foremost, the first question I want to run through is about what do you call that? About total debt servicing ratio. So a lot of people wonder, what is total debt servicing ratio, right? I mean, what does that mean actually? So it's actually monthly debt divided by gross monthly income. Now, when they say gross, they don't actually mean gross. I'll run through in detail what it means. A lot of people think gross means gross, but actually no. The definition is a bit strange, especially for self-employed and for variable income. Okay, so it's important to understand the figure cannot exceed 60%, and it's applicable to all properties, except of course if you are buying through a company. I mean commercial properties and stuff like that. So there are exceptions, but applies to all residential properties. So let's talk about financial commitments, because monthly debt repayments, right? Let's talk about financial commitments, what they are. Okay. So firstly is secured loans, right? Housing, car loans. If I'm contracted to pay $1,000 for my car, that falls within there. If I have an existing housing loan, that falls within there. All these things need to be listed, and you need to have a very good idea of how much you have. Okay. The other part is unsecured loans, credit cards, credit lines, right? So stuff like if you have a credit card payment, but a lot of people ask me, say, Paul, I make my payments every month, right? I borrow 10,000, I charge 10,000 my card for my points, but I pay off every month, so shouldn't be counted. Well, that was the case last time before TDSR came into being. Before TDSR, the banks used to excuse all this commitment because you pay off in full. However, the TDSR framework tells the banks that they must take in the minimum sum, right? So if you charge $300, $500 every month, but your minimum sum is $50, then we take the $50 in. So it's significant because this is 3% of your outstanding amount. That's how you calculate, right? So if let's say you have got a high limit, and then that month your 3% works out to 10K, right? Then it pretty much wipes out a lot of your TDSR. So you must understand how to plan that and how to structure that. Now, why am I talking about TDSR now? I mean, if we are talking about refinancing, right? I think it's important to understand that a lot of us go through a lot of changes, especially in this period where COVID-19, right? Some of us, our jobs are affected, our incomes are affected. Some of us, incomes have gone up, right? So it's important to always understand how to structure, how to to have your numbers at hand. So 60% of your income that cannot exceed. Lastly, guarantees. Now a lot of people are very puzzled. Why do you have guarantees? I mean, I had this client who came to me, told me he had no other commitments. So one of the things that we do with our clients is that we actually run through their credit bureau report. Not all the case, because sometimes clients don't want to share with us. And, certainly we don't force anyone to do that. But some of the clients who've shared the details with us are shocked to see that, for example, and this is very common, where the friends borrow money, they say, "Can you be my guarantor?" Right? Now, when you become somebody's guarantor, that liability is loaded to your credit bureau. It's very simple, because if the borrower doesn't service the loan, who does the bank go after? They go after the guarantor. So even though the person may be a very good paymaster, the reality is that you are as liable for the loan, right? So I've seen cases where loans have been declined because the original borrower ran, right, and the guarantor either couldn't pay or wasn't aware of it. So I've seen both circumstances more often than I realize. That you realize companies also, if you own your own company and the company is borrowing and the company is very profitable, right? But you are one of the directors and you act as a personal guarantor, that sits in your own credit bureau report. It affects your loan. So I had this client who earned millions, and he was very confident when he applied for the loan and things. So we had this conversation, but when his TDSR came out about 150% or something like that, he was shocked. And I explained to him that was the framework, and this is how it goes. Okay. Lata, the webinar is until about 12. I try not to overstretch because people normally have back-to-back appointments and stuff like that. So stay if you can, as much as you can. Okay. And if you want to, you can reach out to us at PropertyGuru Finance. We will help you with your questions if you have. Just pop it into the chat or send us a contact, and we will reach out to you. Go to our website. There's a contact me form. Okay. So guarantors are something to take note of. Okay. Okay, let's talk about income, right? Just now you remember you talked about gross income. So down here, salaries, guaranteed bonuses, fixed allowances, and all these things which are inside your agreements, inside your employment contract, all this income will be recognized at 100%. So in other words, if I make $5,000 a month in salaries and I have $1,000 in bonuses and fixed allowances, the income will be taken at 100%. Sorry, okay. So it's recognized in full, okay, when they put inside the denominator. Now the other point is this variable income, things like commissions, annual bonuses are not normally guaranteed. Variable allowances, meaning the company gives me an allowance every month, but it depends on my whatever figure, whatever system they use, how many hours I work or whatever. All these figures, right, will be discounted by 30%. So it's if it's $1,000 that I earn, it will $700 will be recognized, right? Assuming it's not fixed. Okay, so this is very important to understand. We have seen a lot of employees who are structured in that way, where you have, MVC, monthly variable component, and things like that. All those things will be taken at 30% discount. Okay, so take note, because I've seen cases where people work out their own TDSR. They say my TDSR, I made an offer is 60%. Then they come to us and they say, okay, I want to arrange. Then we will work out the TDSR. I say the figure is 70% maybe. Then they get very upset with that's the case. But all these are defined very clearly within regulations, banking regulations. Okay, so the banks have to do that. Rental income. Now, can you take rental income into the property? Yes, you can. Into the loan, you can. Okay, but there are some rules which accompany this rental income. So, for example, rental needs to have a minimum of 6 more months to run. So, if you have 5 more months of rental to run, you cannot take in that rental amount. Secondly, same thing like the variable income, they will only take in 70% of the amount. Why? Because rental values change, and they account for that by applying a discount of 30%. Okay. Now, as I'm talking, if you have questions, please feel free to just put in the questions. Okay, we can talk about it. Okay. Okay, so a lot of very very good questions. That sorry if I'm a bit distracted because the questions are popping out in front of me, and very good questions which I'll try to answer very quickly. Okay, so looking at this one, next one is self-employed income. So self-employed income, right, is again you are earning money. So there are some rules with regard to income, self-employed income. So firstly, the business must have been in existence for a minimum of 2 years. So if I just start my business and I say, okay, I pay myself 50,000 a month, right? It means that TDSR is 60% of that. That's so how much I should. 35,000 is my TDSR. Answer is yes and no. No, clearly because it is the 2-year rule, right? Secondly, because it's your own business, they will discount your income by 30%. Okay, so in a computation straight away, they will take 0.7 times the amount per month, right? Then they'll also check. They'll normally do a company search just to check when the company was incorporated, and then they'll add 2 years. Now, some companies have different rules. They say that, okay, instead of 2 years, we want 3 years. I mean, most banks use a 2-year gauge to measure. Okay, so that's the thing that they look at. Okay. Now, some people are employees, right? But the companies don't give computerized pay slips. Now, I believe some time ago there were some regulations that say by a certain number of years, by a certain period, all companies must give out computerized payslip. I'm not sure whether that's been reached, but right up to today, I still see companies giving out Excel spreadsheet payslips. Now, it's challenging there in some circumstances. So, for example, if you earn very high income, like 20,000 a month, right? They will do things like they will look at your pay slips and all these things. Okay, that's one thing the banks tend to look at. But if you don't have computerized pay slips and you cannot validate, sometimes you can use just the CPF statement. Okay, but CPF statements are challenging because the maximum amount of income you can recognize per month is 6,000 because of the CPF cap. What does that mean? It means that companies only pay CPF up to an amount of income of 6,000. So if I make 5,000, if I give my CPF transaction history or contribution history, clearly it will show that my income is 5K. But if my income is 10K and I show CPF, it will be kept at 6K. Okay? So those are the things to watch out for. Now, again, there are many variants. I mean, there's things like dividends, right? For those among us who are fortunate enough to own our own companies, right? Dividends. Then what happens? Dividends doesn't appear anywhere in your. It doesn't appear in your NOA, notice of assessment. It doesn't appear in pay slips. So it's a different amount of work that needs to be done. Okay. So come to us, then we will help you with that, lah. Okay. Warren, since I'm just here on rental income, it is the haircut is the discount is 30%. It will be recognized at 70% for the rental income. If it is less than 6 months, they totally ignore. So what do? If you own a rental property and it's got less than 6 months, you go and renew with a tenant now. Get the latest one to stretch over. Okay, that's a strategy that normally the clients, and it must be stamped, meaning it must have it notarized, stamped, very easy lah. Those things are very, very cheap to do, but important. They do not recognize unstamped tenancy agreements. Okay, I hope that answer your questions, Warren. Okay. Okay, so actually, you know all these things, right? You don't know how to work it out. Very simple, you can actually, there's a calculator that we have on our PropertyGuru website. Scan, if you can scan that, all right, if we go to the website, let me show you what it looks like on the website. Okay, this is a live one, so you'll notice this is live. So if you go in and you scan that, we are scan again. Those of you not in yet, just take a screenshot, look at it later. Okay, but it's very, very easy. Okay, so let me move to the actual site itself. You can see the things moving up, okay, and down. Now, this is just a guide for you to play around with the figures. If it's a joint application, joint income. Now, we cater up to, because most cases, joint borrowings come up to 2. By law, you can go up to 4, all right? But that will be overkill. So most calculators go up to 2. Then you can just key in your figures, right? Annual variable income, for each party, your monthly fixed salary. Now, add your fixed and variable components accordingly. Now we have to adjust a bit because this one is something that we built quite some time ago. We will refresh this to reflect more breakdowns, but this is fit for purpose. You can use it now. Okay. Okay, so you can put now this pledge, unpledged, don't worry about it. Okay, why? Because there's a way of using your deposits as income. Okay, whether you have funds to show and all that. And this usually complicates the discussion a bit. So normally I tell people, when you're planning your TDSR, leave this at 0. Okay, when you key in the figures after the discount, the 70%, okay, I just realized this is live site. You will see this, they'll take 70% of this, divide by 12 plus 8,000. That's how you get 8583. Okay, so 583 times 12 is 70% of 10,000. It works out to 7,000. And then the same is here. Okay, now the total income 8583 plus 4233 is this one, 12817. Do you see it? Okay, and then debt obligations, credit card, car loans, existing home loans, so on and so forth. Now, because we are trying to ascertain refinance, and usually in this case, right, we are talking about refinancing. The concern here is what happens if you have income drop and so on and so forth. So forth. Can you refinance? Now, take note. Actually, some banks have given a TDSR waiver. Okay, so in other words, if you're refinancing a place that you're living in, and you're refinancing to another bank, to their bank, they will say, oh, there are certain limits that they apply. So for example, they say, okay, I don't care what your TDSR is, your income drop, okay, but you can still refinance. We accept that. We will not apply. Some of the banks raise the TDSR to a level of 80%. So in other words, instead of 70%, they say your TDSR cannot go above 80%. Now, I'm not going to tell you specifically which bank or that, because it complicates the discussion. Now, if you talk to us, we'll share with you what makes sense and all those things. And, a lot of those questions, should you do it? Why should you do it? That kind of thing, we will discuss in full with you. But this one is just to help you understand what to look at. Okay? So you notice this, right? Assuming you leave your existing home loans 0, right? You notice that this figure that says how much? 5590 per month available for mortgage servicing, right? So in other words, if your loan, assuming there's no TDSR waiver, like the thing I talked about, um, applies here. So you look at it and say, hey, if I look at the figure, 4,000, right? 4,000 is my new monthly installment. Chances are okay, okay? But there are some considerations you have to think about. We will explain to you what it means and things like that. Now, 4,000, for example, a lot of people go and look at current interest rate, right? They'll look at it and say, hey, right now I'm paying X dollars. If I refinance, I'll pay Y dollars, right? It's cheaper and all that. But it is not Y dollars that is used in this computation. The interest rate that banks have to use is 3.5%. So I apologize if it's very confusing, but why do they have such a regulation? Very simply this, interest rates go up and down. Remember last time SIBOR was 2%, right? That was last January, right? Now it's less than 0.5%. So interest rates go up and down. So the regulators put in a 3.5%. You know, if I'm planning to borrow money, they will calculate it at 3.5%. Okay. Again, I apologize if it gets a bit complicated. Again, because this is a webinar, hard to talk about all cases lah. Okay, so I hope you appreciate that. So anyway, these are the figures that tell you what is the limit, what's the debt obligations. Your TDSR is 17%. Okay. We have a thing called the affordability calculator that uses 3.5%, but it's complicated to use a bit because when you're looking at refinancing, it becomes a bit confusing. But this is how you work out your TDSR, okay? So let me move back to the slide, okay? I hope you have taken, if not, just take a screenshot, then look at it, play around with it further and things like that. Somebody talked about research. I think anonymous. I don't know who lah, but apologize for not knowing your name. But this one, when you look at your competition, this is one thing you need to do. Understand your TDSR. Other things you need to do, I'll share with you later. Okay. So let's move to the next one. So preparing to work out your potential savings, right? First one, you have to know what your outstanding loan amount and interest rates are. Okay. And you will know that in the bank statements that you receive, right? Some clients have bank statements, but they throw away. So go and check with your bank, what is your outstanding loan and things like that. Okay. It's important because different loan amounts have different types of interest rates, right? There are different packages and things like that. So we need to understand. The other thing is this interest rates. If you are getting a 1%, I mean, I'm just plucking a figure from the sky. If you get a 1% interest rate, then your new packages are 1.3, 1.2. Does it make sense to refinance? Answer is no, right? So you have to know these things, especially if you're like, HDB loan is 2.6%, right? It makes sense to consider because your effective interest rates are about half of that, okay? Your real interest rate is about half of that. The other thing is this, know your blended age. What do you mean, Okay, so in the old days, let me explain to you how it works, or used to work. If let's say me and my wife want to buy a property, right, and the property is let's say 1 million, and then I want to borrow, right? I'm let's say I'm 55 lah. I want to borrow, then I say, hey, actually, right now based on current rules, I can borrow up to 10 years, right? Or last time was up to age 70, 75, depending on which bank. So what they do is they take the child. I say, hey, I put my son's name. My son is now 21 years old, studying in university, right? Then I can take a maximum loan of last time 35 years based on his age, right? So that was considered a loophole, right? So what the government did was to say, okay, now you cannot just take the age of the youngest person, right? You now have to blend the age based on income. So it fixes that problem. If I go and take my son who is in university, his income will be zero, right? And when it's zero, it means his age plays nothing in the loan at all. That's the reason why, okay? So let's look at this. I'll give you an example. So Mr. Tan earns 5,000. He's 30 years old. Mrs. Tan earns 6,000 and she's 28, right? So what happens, right? How do you blend the age? First, you add the two incomes together, 5 and 6. Now, this 5,000, 6,000 is the figure that we just want to show you how to compute, right? That's the figure to use, okay? and then you take the ratio lah. 5,000 divided by 11,000 times 30 years old, plus 6,000 divided by 11,000 times 28 years old. Then you blend, add the two together, you get 28.91. So you round up, you never round down, okay? So when you round up, it's age 29. Now, why do you need to know that? Because loan periods are varied. So I can borrow how short or how long, but the length is usually up to age 65 or 30 years for a private, right? Or age 65 up to 25 years. Now, that's for new loans. Refinancing, you add 5 more years. So a lot of these are rules to remember, but the blended age is you need to know. Now, when you talk to us, we'll work out all these numbers for you, okay? And then another screen, right? Again, uh, use this to scan and play around with your figures, okay? These are the things to look at, and then you can play around again to work out your own refinancing. You can agak, just estimate how much savings you have. Now, these savings, bear in mind, do not take into account moving costs. Somebody asked, right, checklist. In the checklist, you have to understand how much money does it cost for you to shift the loan, okay? And I'll run through with you what are the things to look out for, okay? So take a screenshot, very quickly. I'll just take a sip of drink, and then I'll move to the live side, okay? Just give me a minute. Giselle, while they are taking that, yours is a new purchase question. I'll just answer that. MSR and TDSR are two factors that are taken in. MSR is mortgage servicing ratio. That's 30%, based purely on your borrowing rates. TDSR takes into consideration other borrowings. I think it's really very important to understand that. So both are calculated. Although MSR usually is the hurdle, most people fail at MSR rather than TDSR. Okay, so that's the thing to be wary about when you're looking at that. When you're not sure, just reach out to us. We'll answer for you, help you answer that. Okay, so let's look at this. This is the refinance side, right? You can choose private or HDB and so on and so forth. Remaining loan amount, let's use 650,000, right? And then remaining tenure means remaining number of years. You can find out, okay, you can see all these things. Remember, all these things are estimates, because if you are in a floating rate package, your variable rates will go up and down, right? So it's like a snapshot of what your possible future is like, okay? Because it's impossible to model real life, because we don't know what happened. Nobody could have modeled COVID-19, right? No, nobody could have modeled Brexit. So all these things, right, are assumptions that you take now, then you look at it. Then what your current interest rate is, right, 2.5. Then let's say you put UOB as your current bank. So you search, right? Then you search, then you'll get a search like this. You can actually select or unselect. Every time you click, the thing recalculates. Okay. Oops. Okay, the thing recalculates, and then you can see your options. Now you see this, you can show more, right, what your rates are like. Your net interest rate 1.05, 1.05, 1.1, 1.5, right? And what your monthly savings represent. What is it versus 2.5% currently? Every month you are saving 452, and it gets less because the net interest rates go up. Okay, so it's really very important to understand, how it works, and now this is a short way of understanding what the numbers look like, because when we work out these numbers, right, actually when we talk to our clients, we actually look at it, how much money you save in 1 year, 2 years, 3 years, 5 years. Now when you're refinancing, because of the cost that you have to incur, we look at all these points as well, right? It doesn't make sense to save $500, let's say, right? $500, and then you have to incur $3,000 to move. Doesn't make sense. But if you can save 13,000, but you incur 3,000, net savings still 10K. Makes sense, right? And how long is your clawback? How long is your break-even period? We look at all these things. Okay? Then you can play around with this, okay? You can play around with this. It's very simple. That's why we say we make it very easy for you to play around with the figures. And if you're not sure, you can click and leave your name and number, and we'll contact you to have a conversation. Now, I sigh because a lot of people say, wow, you guys are, I'm very afraid, when I talk to you all, it means that you all will hard sell me. No, answer. The point is this, we work out the numbers for you. If it makes sense to refinance, why not, right? If it doesn't make sense, we'll tell you, don't do it. It doesn't make sense. Financially, the numbers don't lie, right? Of course, there are other things we need to look at, like what your life plans are, what your cash flow requirements. A lot of people now look at only interest rates, but what happens if you are running a business or your income is affected? You say, my family income is affected. I need to take some cash out of the property at 1% to go through the next 3 to 5 years comfortably, just in case, right? These are options that we talk about. Don't just look at interest rates, okay? I think it's really important to understand that. So this is what I wanted to show you, right? You can actually see details like legal subsidy and how long is the lock-in period and all those things. And then again, the inquiry form that you fill up, and we will help you with that, okay? We will, if you leave this on, we'll send you updates and all those things. We are planning a lot more exciting content, to share with you. Again, we are not going to be hard selling you or anything, okay? It's just a conversation that we hope to give, and we want to be, 75% of the market comes to us when they look for a property. So we want to bring this aspiration across to our finance space as well. We want to help our clients. Okay, just look at the time, it's 11:34. Sorry, I overrun, okay? Okay, let's move back to my slideshow, and I'll talk through this part very fast, but you guys are having the questions already. Continue to do that, okay? Okay, so I talk a lot, sorry. So again, submit your questions. For those in Zoom, put in your Q&A. For those Facebook Live, just put in the comment section, okay? We are capturing everything, okay? Yeah, so that's the thing. So commonly asked questions, as I'm trying to answer that. Will my bad credit rating be a factor if I choose to refinance even though I have no current debts? Now, there are two things that the credit bureau does. Firstly, it looks at your current state. The second thing is it looks at behavior. So let me run through with you this, okay? This is an important part you need to understand. For all of us, right, who think that paying late for credit facilities is okay, the answer is stop. Please start paying on time, because we are moving in the direction that more and more emphasis will be placed on credit bureau. So please take it seriously. I have clients who earn a lot of money who are late in payment. So their state is okay, right? They don't owe money, but their behavior is poor. So, I've seen cases where they have made a lot of money, but loans are still declined. Okay? So let's look at this. In this one, this is a demo version. They have all your details, right, about your credit. This is the part that was asked, right? So there's a rating AA, BB, CC. There are a lot more ratings than that. Go and buy your own report. Go and take a look. It's $6 plus GST, right? If you need help to understand that, come to us. We'll help you. So you see this risk grade HZ. HZ represents a risk of a certain percentage. Now this one a bit strange because they now whack the figures, but it will reflect truthfully what your risk is, what the risk is to the financial institution. Okay, and if it gets too high, usually above a certain point, they say we're not going to lend. We will automatically decline the loan, even though you don't have any outstanding debt. Because a lot of people say I sell house then I settle the property, right? And because of that, they don't have that kind of figure of outstanding debt, but the behavior is still there. And generally, we find that adding to that story, when after a certain period of time, people tend to revert back to their spending behavior. That's why a lot of times the banks don't approve. Okay. Then lastly, it talks about how much debt you have, right? Totally. That's why it's very important, okay, to understand. Next one, should I refinance if I plan to sell my home in the future, right? That's a question that Jaslyn was asking. Somebody else was asking that too. And then I'm planning to sell my home in 3 years. Should I consider refinancing to a 3-year package, 5-year package? I was thinking of taking this chance to lower repayments in 3 years. Okay, so you look at all these things, right? It makes sense. Like the second example, because I don't have the name, it makes sense to do that if your plan is firm, meaning in 3 years you're planning to to sell, and truthfully that's the case. Now banks, some banks have no lock-in packages, right? Where or sometimes now I don't think that that's very common now, but they have waiver due to sales, meaning if you sell a property and then you take a second loan from them and then they'll waive that, or sometimes they don't have that kind of requirement. Each bank has different requirements at different times. So they may have a requirement in this loan that the next package they come out, there's no such requirement. But sometimes there's waiver due to sales, meaning after 1 year you sell. I just had a client do that. He refinanced, saved a lot of money, and then he's just sold his property. He's very happy. He's coming back to us for another loan, right? Why? Because we gave him very good advice. Because when he went to talk to people previously, they said don't bother, right? But what we did was we explored venues for him and say, okay, if you do this, this is how much you will save over 3 years. If you do this over 1 year, this is how much you will save. But and all these things. So we basically worked out the numbers for him. Okay. So the answer is it depends on what your plans are. If really you think that it's a 30% chance of selling, then may make sense to look at your options. Ultimately, just work out your numbers, put in the application. If you are not sure, then look at the figures. If it makes sense to you, then go ahead. If not, you can walk away, right? So these are the things that you should be thinking about. I hope it makes sense to you. Okay. Again, I apologize if I can't zoom into your case because many versions. Okay. This is also a very common question. How many percent difference in my interest rate before it is worth it to refinance? Okay. So they're saying 2.5% down to 1%. Is it worth it? Yes, that is only one of the factors. So let's look at that. I'm just going to put everything up. So you look at this, right? Interest rate is one of the factors that affect interest costs, right? But there are other things that are going to affect you. Refinancing is not just about interest rates. It's about options, right? It's about, for example, if I'm planning, so I've seen this case, husband and wife, husband loses job, wife is working a full-time job, income has dropped, but cash flow commitment is still the same, right? So what they want to do is refinance to lower the monthly installment because the cash flow, it's not so much an interest, it's the cash flow element, they want to drop it. And then we extended the loan period for them. So in other words, instead of 25 years or 22 years, we extended it to 28 years, or 22 plus 5, 27 years. Extended a loan tenure, bring down the installment. These are the strategies, because the next year or so, it's a period that people need to look at their cash flows, right? Businesses sometimes are very good businesses, but because of cash flow problems, right? If you can't operate during a lockdown or circuit breaker, then how, right? No cash flow. So these are the things. The other factors are loan amount and the types of loan. These are the factors that, for example, some people want to increase the loan amount. Some people want to um, some people increase loan amount, lower loan amount. All these things will come into play. We will examine all these factors to move from fixed to floating, floating to fixed, right? Some people, even though fixed rates are usually higher than floating rates, want to have fixed rates because of stability. So it depends on the plans, okay? So please don't just look at interest rates. And I can't give you an answer of how far the interest rate should be apart. Why? Because what happens here if the interest rate is is different. It's 1%, 2%. But you are telling me your loan is left 5 years versus 10 years versus 15 years versus 20 years. Figures all will change because of that. Uh, I hope that's clear. Okay. Now there's a poll that's up asking you, if you have what do you call it, webinars like this, right? When is the preferred time? So please do that, because we are very serious about helping people understand and give content. If you look at our YouTube channel, you will notice that we've done a lot of these uh, talks and all those things. And now we are moving more to answering questions. Why? Because we've covered a lot of the factors over and over again, but we are trying to zoom in. Okay, so bear with me. Okay. Just give me a minute. Okay, so let's look at the next one. What fees and charges should I be aware of before I refinance my home loan? Okay. Now, this is part of the checklist question we were talking about, right? Somebody was asking me. So things to be aware of, firstly, is legal fees, right? How much do you think you need to pay, right? Generally, the legal fees are quite standard, 1,008, 2,000 to 3,000 thereabouts. Now, different lawyers provide different quality of work. I'm not saying some are lousy. It's just that we have to be very focused on what kind of service they provide. Some of them will give you a lot more value added and things like that, but they charge a bit higher. So don't just look at the rates and things like that. Okay. Valuation fees. Now, valuation fees is something that you need to move. Normally it's $300 to $500, but if yours is a big landed property, they charge more. Why? Because there's a risk and they factor all these things in. Okay. Cancellation fees. So if your loan is not fully disbursed and you're with a current bank, you want to move out, right? It's like a facility fee. Typically, the banks charge 1.5%. So that's why we typically ask you, what is your lock-in period? What is your, next one is lock-in period. What is your loan fully disbursed? What amount is not disbursed, and so on and so forth. All these factors are inside. Now, there's one more point that I haven't written, but because I forgot, is that of the clawback fees. Now, let's say now I go and refinance, right? I go and refinance to another bank, Bank B, right? So Bank B tells me, hey, if you come over, I'll give you a subsidy, 2,005, okay? But you have to stay with me for 3 years. Otherwise, I will ask you to return me this amount of 2,005 or 3,000, whatever figure they give you. And this is what we call a clawback, okay? Now, the lock-in period may be 2 years, but up to the period of 3 years, if you refinance and you get out of that bank, they will ask you to pay back. They are not penalizing you. They are just recovering their original costs, right? So after the 3 years, if you move, they will not claw back. So these are the things that to remember, okay? Very important to look at. I mean, within the offer letters and the terms and conditions, there are some clauses which could be troublesome for some people, depending on their own profiles, right? So those are things that we look at also. Okay, how are we doing for time? 11:46. Okay, and a lot more questions here. That's good. Do you have to refinance every 3 to 5 years each time after your package ends? And how soon after refinancing can I refinance again? So this is where the philosophy differs. Excuse me. Let me take a sip. So this is a philosophy which differs, and it depends on individual people. For some people, right, they only look at 3 years and then they want to refinance. They say, okay, if I can get 1, first year 1%, 2 years 1%, third year 1%, I don't care that the third year goes to 3%, right? And then I refinance. Under those circumstances, you have to, because it's going to go to 3%. It doesn't make sense, right? But if I tell you side by side 1.1, 1.1, 1.1, then let's say 2%. All right. Do you have to refinance then? Maybe, maybe not. You see, because when you take this strategy, you are assuming a lot of things. So you're assuming firstly, your income levels will be higher or the same, that you can refinance. So in other words, if we lose our job or we lose our business, our income levels are not the same, then you cannot refinance. So if you do the 111, then 3, at the 3 level, you want to change, cannot, because not enough income. Okay, that's your assumption you're taking, that you have that income. Second point is this: you are assuming that there are packages that will be better or equal to the 1%, or maybe or better than 3%. Sorry. So let's say after the third year, you look at the packages is at 1.2%. But what happens if the year 3 package is now 3%? Will you refinance? Answer is no lah. Or even so 3.2%, will you refinance? Maybe not, because you could end up spending a lot more. These are the assumptions we are making. I've seen such cases also. The third assumption you're making is this: that the laws didn't change. So for example, if you take a loan now, right? Remember TDSR came in 2013. When 2013 came and TDSR came, a lot of people couldn't refinance. So if you have a 111 and followed by 3, you'll be stuck, cannot run away. Okay, the same scenario is for those people. Somebody asked me about loan size below 100,000. Now, different banks have different levels of minimum loan sizes. Some banks have a minimum loan size of 80K. Some banks have minimum loan size of 200K. So, generally, why? Because they just don't have it just doesn't make business sense for them to refinance. That's why they take those kinds of position. So yes, you do have to have a minimum loan size in order to refinance, but there are strategies to handle that. All right, which we teach clients as well. Okay, especially for private properties, HB a bit more challenging lah. Okay, so yeah, how soon after refinancing? Actually, you can refinance anytime, even during lock-in. So one of the biggest questions is people say, should I refinance? I mean, it's lock-in. But look, if after refinancing, right, you can save. One of my colleagues, somebody in my team just shared with me, right? The loan size is smaller. I think 100, smaller than 100K, or no, not smaller, about 100K, small relative to the millions. So I don't mean to say that it's nothing. So don't misunderstand. Small relative to the big loans. At 100K, the savings was something like 4,000 over the next 5 years. That is gross savings. After net out, it's still about 3,000 savings. I remember the net figure lah. I don't remember the gross figure. So there's still a lot of savings to be had, even though there's a short period penalty. The trick is to work out the numbers and to understand what our objectives are, right? Again, if you're planning to sell, don't refinance lah. If you can't get a no lock-in package, or if the numbers don't stack, right? Always have that conversation. It's like a health check lah. You go and see a doctor. Doctor tell you actually you're very healthy, right? Or you're healthy, but these are the 2 things you need to watch out for. That's what we do, right? I hope it's clear for you. I think that was the last question I had prepared. I'm going to leave this here. Okay, I just realized that the slide is not clear. We are giving away $20 worth of shopping vouchers for the first 20 customers who book and complete a conversation with somebody in my team, right? Why? Because just encourage you to go health screening lah. That's what we're trying to do. I think it's important to understand, to see whether it makes sense to do all these things. Okay, so let me look at the questions that I haven't covered. Okay, so let's see. Okay, so Jaslyn's question I've handled. Checklist, we will come up. I think we do have a. Okay, I think we do have a checklist. If not, we will come up with something like that for you in due course, so that you can go and look at it. HDB loan less than 100K. So it depends on what loan size. If you're talking 20, 30K, it may be lower than the minimum loan size. But certainly, if you are able to refinance, just work out the numbers and say, end of the day, you know, because sometimes you work out the numbers, right? If I tell you, okay, per year you save $50, then you say not worth it, right? All the effort, right? But for some people, say, yeah, it's still money, right? So it depends on this one. Makes sense. Square to reach out to us, then we'll talk to you about it. Okay. Uh, Non-residential for industrial property, there's private company that has no loan asset. Can the company get a loan for property now? For industrial office under private has no loan. Answer is yes, but there are a lot of questions because they look at your financial statements. They also look at your purpose. Is it for owner occupation or for investment? Reach out to us. YZ Yun Chow. Reach out to us, then we'll talk to you about that. We will help you work out the variations. Because there are a lot of things that we need to consider. Yeah. Is it an investment? Oh, thank you, Steph. It's now nice already, you see. So if you look at this, all these things will be worked out for you. Okay. Does the number of credit cards you hold affect the TDSR? All the credit card balances due are paid on time. Okay, so the score, right, will not be okay. So let me tell you something. um, TDSR no impact. But if you have 10 cards, right, each $50, because you know why? I know why. A lot of us go to a restaurant or a place and do a credit card promotion, right? Then you use credit cards to enjoy the promotion and then you pay. But you know, if you have 10 cards, I'm exaggerating, or and each one is say $100, then it adds $1,000 to your TDSR. It takes away $1,000 from your loan amount, the servicing for your home loan. Okay, so it does affect. Now, in terms of credit bureau, does it affect? Now, firstly, credit bureau, we don't know how they compute. We don't know the formula because it's meant to be proprietary, right? But I suspect number of credit facilities would be something that they look at. But it's my suspicion only. Don't hold me to it. How about business loan? Sushana, I don't know um, what that question means. You know, if you can elaborate, we can look at it. Okay. When is the right time to refinance? If your loan is only 3 years fixed period, what happens if salary is reduced after 3 years? To my opinion, floating rate seems not a goal for versus fixed period. Now, there are two decisions that people look at when you are looking at loans. Okay, so it's a very common thing that people mix the two up. One is the credit decision, and the other one is the product decision, right? When we look at this, Anthony, you're talking about the credit decision versus the product decision. The credit decision says this: when we look at TDSR, when we look at these factors, can the client service the loan? That's the question they're asking. They look at behavior, they look at your current position. It has got nothing to do with fixed and floating. If a person's position starting point, they say cannot service, then regardless of whether it's a fixed or floating rate, the loan will not be approved. Okay, so the distinction needs to be separated between the two. Okay, um, and it's all a question of numbers, right? You look at it, what happens if salary is reduced? Um, I think end of the day is affordability. We work out those numbers. I remember some of the people have TDSR exemptions, right? Some of the banks have TDSR exemptions. So if it's for your own stay, we can work on things like that. Okay. 11:56. Okay. I suspect I cannot finish all the questions because there are a lot. Does it make sense, Anthony, to secure a longer locked period of 5 years versus 3 years fixed rate? In the case refinancing has issue, what are the pros and cons? I think the point again is this: why do you want to go for a fixed rate versus a floating rate? The longer versus the shorter. That's the question. Is it because your risk appetite is lower, or you just want to be you're unsure of your financial position, therefore you want to lock in, right? It's hard to answer that because Some people die will want to have fixed rates, no matter how good their financial position. So I can't answer that. Reach out to us, lah. This one we will talk to you and answer your question specifically because it's very general. I don't know how to answer that. Does number of cards affect loan amount? No, it's usually is the amount that you need to that you consume that you use on the cards. Just because I have 8 cards, but I don't use the 8 cards, I only use 1 card out of the 8 or 2 cards out of the 8. Then TDSR impact is there, but credit bureau I can't tell, because I don't know the formula. Jamie, divorce maintenance. Are you considering it? Are you talking about income or are you talking about servicing? Because right now, right, if let's say one party is paying the other party for divorce maintenance, it doesn't appear in credit bureau, right? So if you're talking about it as a form of income, certainly you can put that in as a form of income, right? To evidence that you got additional income. But if you're required to provide this maintenance, then I think the liability there is not shown anywhere except in the court documents. Okay, I hope I answer your question, and I'm trying to go fast. Is it okay? Please answer yes or no for me. If I stretch another 5-10 minutes to try and finish as much as possible, is that okay with you all? Just say yes, please, or no. Shut up, Paul. Okay. I'm trying to help get more information out. If buyer buys a property with tenancy, does this consider as income to increase loan? Shirley, that's a good question. Just now I say, right, what's your remaining tenure of the tenancy? If the tenancy left 3 more months, then no. If it is 9 months, 1 year, then yes. Then you look at it lah. But you see, so just to confirm, Shirley, you're looking at that and in your tenancy, in your OTP, right? Your option to purchase, it says purchase with tenancy, right? Yes, then it does come in. Okay. Warren, I've answered your question. Ryan, last year with fixed rates for 3 years lock-in, considering interest rates affected by COVID, is it better contacting bank to refinance again with floating rate? So usually what happens is this. In a fixed rate package, banks go and hedge their costs upfront. So there is a break cost. Normally they will whack on you 1.5%. I mean, you can have a conversation with them, ultimately, but they will certainly charge you breakage costs for fixed rates. Now, the point about interest rates, it's really a point of view lah. A lot of people think that the rates, the Federal Reserve they are going to hold rates till after till 2023, right? Okay. Sorry, okay. People are saying can continue lah, and answer question because yeah. So I'll just continue while I can. So yeah, the question is work out the numbers, right? Does it make sense? And secondly, when you contact your bank, it's called repricing, internal versus external. Refinance is external, repricing is internal. You can certainly contact your bank to do that repricing. Right? Those are the two options: reprice or refinance. But I've seen a lot of clients who want to move. Why? Because sometimes when you have you want loan extension, you want to do more loans and things like that. Some of them have, and it's not true for all the cases. Sometimes clients find that it's better to move to a different bank. It's personal preference and things like that. We run through with you all your options. Okay. When Jenny, when the bank gives 1.5% mortgage rate, how does it calculate our payment? That is a good question. What they do is they use what we call a PMT function, a payment function. It is a scientific calculator, financial calculator function that they use to calculate. So what does that formula do? If you're using Excel, go and use the formula PMT. Okay, PMT will help you calculate. Then the fields will tell you how to fill up. That one basically calculates in a way that zero rises your loan after the end of the loan period. So let's say your loan is 25 years and your interest rate is 1.5%. You put in those figures, they will tell you a monthly installment. The monthly installment includes interest and principal repayment. And then after 25 years, it becomes zero. Cannot run away. This figure cannot run away. Right? It's a figure that everyone can work out if you know how. Okay, so that's how it works. They cannot plug from the sky. Okay, Raymond, I paid first 5%. I paid first 5% of my HDB under the deferred down payment scheme for uncompleted payment. How do I go about switching from a HDB loan? Do I have to reassess more than 6 months to a bank loan to take advantage of the bank's low interest currently? I'm not sure. Ben, do we can undisbursed loans be done like this? I think should be able to, because there's no cost from HDB side when you switch out. But Raymond, you must understand it's a one-way street. When you refinance out of okay, Ben, my colleague confirms can be done. Okay, so Raymond, reach out to us. We'll help you with that. But it's a one-way street, meaning you come out of HDB, cannot go back to HDB. But it makes sense because at 2.6%, even when interest rates are high, I haven't seen. I'm not saying it won't happen in the future, but I haven't seen rates exceed that. Okay, so it makes sense to work out the numbers, and we'll look at it and help you calculate the numbers. Okay, Giselle, I have answered already. They take full income. Okay, sorry, I answered differently. I just realized they take your full income again with the haircuts and all those things. Uh, as Lim, repricing, I told you the difference is you go within your bank and do something. Sometimes it's not easy to do it within the same bank if you're looking to do additional things, but certainly there's an avenue for you to talk to your bank. How early should one loan to refinance before end of the current mortgage loan? That is a good question. The answer is to keep track of it, uh, like a health checkup, once or twice a year. Okay, why? Because a lot of people look at penalties and say it's not worthwhile, but actually not true. We've helped people save a lot of money. A lot of clients have broken contracts when they come to us and then they work out the numbers, and we don't force them. They look at it and say, wow, it makes sense, right? Or their objectives change, right? What they want to do and things like that. So it makes a lot of sense for them to do that. Okay? Cannot. I hope it's clear. Lily, we have a lot of content, Lily, about the pros and cons of using HDB. I think the difference is this. Pros and cons of using HDB. HDB, if you're using the HDB loans, right, you don't have to use that much cash. I mean, if you're using cash, it's 5%. Balance of the payment can be from CPF. That's for resale, right? If you're buying direct from HDB, you can use all of it from CPF. If your balances, I mean, there are different rules inside. If you have, let's say, 10% CPF balance inside, right? And then you pay, then you buy direct from HDB, then 10% goes out from your CPF. You can actually borrow up to 90% loan, okay? But the rules are different. For bank loan, it's 75%. There's a lot of there's a lot of things that go into it, right? A lot of people also perceive that the HDB, in terms of because it's not meant for profit, right? What they do is that when you borrow money and let's say something goes wrong, you can appeal to the HDB, whereas banks and financial institutions are obviously for profit, right? So those are the normal questions that we talk about. Um, Interest rates are lower for bank currently, and so on and so forth. Praveen, Property is in my wife's name, and at present she does not have a job. Can the property refinance with other bank? We need to look at that case. Why? Because some people don't have jobs, but they have freelance income, or they have cash deposits and all these things. Uh, so that's part of the factor. Structurally, I don't know the reason behind the property being only in your wife's name. There could be some avenues you can explore with that. Okay, how we can help that so that you can refinance. I think hard for me to answer this without the full understanding of your circumstances. So please reach out to us. Okay. So now it's 12:07. Let me do a few more questions and then we'll end at 12:10 if it's okay with you. Okay. Okay. Praveen, can guarantor? No. The answer is no. It, okay. So one of the rules that okay, one of the rules that the new framework does is this: that if you are going to be a part of the loan, you must be an owner of the property. Why? Because in the past, what happened is this: I buy the property in my name, then I put my son's name or my child's name as a borrower or as a guarantor, so I can extend the loan period and all those things. The bank regulations change that, so you can't do that anymore. Okay, you must be at least an owner of the property. Okay, or what we call a mortgagor. Checklist. Okay, I hear you, Lata. We will work on it. If I got a job out of Singapore, I think this one has been answered already. But I don't have any income in Singapore. Will this affect refinancing? Answer is yes and no. No, in the sense that you can still refinance, but there are rules that we apply to income. The banks, we know how to position that and how to frame it with the banks, right? The documentation will be slightly different from, obviously, because you're not getting income based in Singapore. Okay, Ryan, I believe somebody has answered that, but reach out to us so we can help you. Okay, um, Joanne, how to calculate a loan quantum on our own? Loan quantum is okay. So the maximum loan quantum for the first property is 75%. Okay. The other factor, remember just now I showed you how to calculate your income, right? And then your TDSR earlier, right? Yeah. So the TDSR cannot exceed 60% of your income. If you're buying a HDB flat, all right, or BTO, or you cannot exceed 30% as well for mortgage servicing ratio. That is only based on your home loan. Okay, Joanne, if you're not sure, talk to us because this one can get complicated. Why? Because income can be different lah. You may have dividends and so on and so forth. Okay, so last two questions. Okay, I'm sorry. Um, okay. RT, any impact on refinancing when the government starts using SOR? I don't understand the question about refinancing. Are you talking about loan packages? Um, Government does, it's the banks that come out with those packages, right? So they don't use SOR anymore. SOR has been phased out. They're looking at SORA, which is the Singapore overnight slip my mind. SORA, Singapore overnight rates, and then they use those packages. That will be the new one. It affects the. Remember I told you, right? There are two criteria. One is based on credit. One is based on loan, right? The package. This is the package question. You're asking me a credit question. Two different things, right? That's why credit and product departments are separate within the banks. Okay. I hope I answered your question. What are views on decoupling a property and sell Singapore overnight rate average? Sora, thank you, Stephanie, or Lavish. I don't know who. Okay, what are views on decoupling? So this is the last question. Okay, the answer is: do I I think that's a strategy. That's a good strategy, even though it's purely for refinancing. But usually when clients, one of the reasons clients restructure and refinance is to do decoupling. So this is the question. So when we look at this, right, this is a good strategy, but there are pros and cons associated. Personally, if the couple is in good standing, and good income with no financial risk, because remember, the moment you split up your liabilities like that and you decouple, right, the property, you cannot help each other in terms of CPF and things like that. So there are a lot of points to consider, which we normally run through with our clients. So we'll share with you, you say, okay, so what are the things to look at? Financially, are you okay? Risk, we'll ask you all these questions. I think it's important to work out. And sometimes there's a strategy. We've found cases where people decouple, right, end up paying more. People decouple to save on additional buyer stamp duty, right? But because of the financial circumstances which are different, they end up paying more when they decouple. Strange, right? But it's true, right? So it depends on the circumstance. So okay, I can't do it already. Got questions. So what we'll do is this. We will try to answer these questions in our content and stuff like that. Okay. And reach out to us. You've got the WhatsApp chat and things like that. Remember, we are giving, $20 is just a token lah. Spend time doing this. We are encouraging people to do all these things, to look at your numbers. Don't just assume that, we didn't lock in, no point. Or don't assume that your loan size is 200,000, not worth it, right? Just do it and then have that conversation with us, okay? I hope it's okay. I apologize to those I've not been able to answer the questions, but certainly we will, if you look at our Property Guru site, you will notice that we have lots of content and things like that. And just reach out to us, and one of our colleagues will be able to reach out to you. So that's all I have for today. Thank you very much. Also, can I just check though? What are your views about this type of webinar? Has it been useful? What kind of information do you want to hear? Please put in the chat group. Allow us to understand what you're looking for, so we can give it to you. Is timing good? The kind of survey that we've done already. If you have suggestions about topics to cover, give us that as well. We love hearing from you. I think it's important that we continue with this conversation, especially these times, right? And people are beginning to have more understanding of their finances and things like that. It used to be in the past where people just assume that there's only one way to do, or only one right way. The answer is no. The reality is that, there's a whole measure of ways you can manage your finances, and come to us, then we can work out with you lah. Okay, so thank you very much. Any other things from my wonderful colleagues? Anything I need to say and stuff and all those?
Nothing else. Thank you, Paul. Thank you, everybody, for joining. Thank you.
Thank you very much. Yeah. So thank you, and we will end the webinar now. We'll talk to you next time. Okay, with hopefully more interesting drop topics that you want us to talk about. Thank you.
There will be a survey link at the end of the webinar. It will open up in your browser after the webinar ends. We would really appreciate if you could fill that up and give us your feedback. Thank you so much. Have a great day.
Thank you.